virtual camera, and audio's back on OBS. All right, I'm going to go back again. So this is going to be, it's going to come up as a new stream for you. I apologize for the testicle difficulties here. All right, Benito 2030, Deuter 178. The current situation in market is so strange. People don't want it to be over because of reasons, obviously. Everything we've learned in the past years is contradicting. All right, 4 years versus the QT ends, rate cuts, 2x all-time high for Bitcoin only, and a lot of alts not even hitting all-time highs versus 3 to 10x all-time highs from last cycles. Blow-off tops versus no blow-off, all that euphoria, all of it. People are looking for answers and hints. I do as well, and it's impossible to get good ones. Either it's cope and you just believe what confirms your bias, or you think about capitulation, but you're scared of missing that one last leg of the cycle. Bad news, I don't think I can help you either, at least not for the short term. I think the 4-year cycle is dead, but again, maybe I'm just coping. But on the long run, things look great. L1 scaling continues. High fees will come back from time to time. But generally speaking, L1 is viable for way more people in portfolios than expected. And the L2s are scaling, like really scaling. And I'm not talking about the transactions per second numbers from Lighter. Those are great as well. I'm more referring to ZK Sync, Mega ETH, to a certain extent base. Let's see if they can ZK their chain. And think what we are seeing is more than what we need in terms of infrastructure today. This obviously includes the fork in December. I think we basically only need interoperability. The more I think about it, the more it's clear to me that composability plus security on a world ledger is everything we need. If people could do stuff in the ETH ecosystem without waiting and even knowledge of L2s, because for them it's one transaction and it's confirmed within seconds, then there's really nothing that can stop Ethereum. Long term, the research and the hard work will pay off. Yeah, this is so true.
I've been saying that a while.
I've been thinking about this. Like we've had hundreds of improvements over time. If you go through all of the different things the L2s have done.
Oh yeah, we've
I'm
cut issuance by 90-something%. We've cut energy. We got a green narrative. We've increased the TPS. We had an L2 narrative. We've had stablecoin adoption. We've had tokenized commodities, we've had tokenized equities, we've seen the adoption of institutions, we've got the buy-in from Chase and all the celebrities, JP Diamond, Larry Fink, etc. We've got just everything on the fundamentals. Like we've got Robinhood, we've got like 5x growth from Ondo and various protocols. We've got credit cards now. We've got all the IBAN adoption. We've got MiCA compliance. We've got the Genius bill. We got the stable. We've got the market structure bill pending. There's just like a million things have gone right.
And what does the price do? The price does this.
We've got the macro environment. We've got rate cuts that are happening now. We've got quantitative tightening is ending. We're going into quantitative easing. We've got like everything is pointing up, and the price is just down like almost 50%. And you're just like, WTF. It is so weirld to live through.
I know.
What feels like just a... what can you do? You just put your hands up and you're just like, okay, well, I don't know. We had someone put a sticker on a skateboard once upon a time, the price would go 20%, right?
Oh my
God.
God.
A picture outside someone's office, like a Google office, and then like the token price would yeet up 100%.
It's all gone.
And now you're seeing like visible signs of adoption. You're seeing like the Biddle fund, like hundreds of billions of dollars. You're seeing you're just seeing adoption left, right, and center. You're seeing bank after bank launching pilot programs and
it's nuts.
Come together into consortiums in order to adopt this. You see every TradFi financial firm has to have a answer for what their stablecoin strategy is, or what their blockchain strategy is at this point. It's just a standard part of every yearly deck that they're all required to put together, right, for the board of directors. They have to have an answer for what they're like. What's their response to AI? They have to answer for what is their response to stablecoins on chain. And yet, crab battle, right?
You know, I will say one of the most bullish things happened to me today, because I told my wife, I'm like, I don't know what's going on, because I had every intention of maybe trying to buy a house over the next year, right? Take a little off table this year, take a little off next year, and finally get something. Nothing fancy, just someplace different. Just because we've never moved, we've been in the same place forever, and and I was kind of lamenting about it. She's like, "Why?" And I'm like, "I don't know. Like, it's all puzzling to me, but I think the whales be doing whale things." And then later on from work, she texted me. She's like, "We're not selling until it's over $5,000. I'm like, "You go, girl." Like, wow. Okay. Now we got a target. Now she's establishing a target. She's getting bullish.
You had stronger hands than me. I definitely let go of some this cycle.
I would too. Yeah.
I sold about 30% in the 4,000 to 5,000 range.
There you go, boy. Nice.
And I will happily buy it back in the 1,000 range.
Yeah. You may get your wish.
That's not a wish. I would also happily not buy it back and let it go to 10,000. That's
fair too.
I'm just playing a game minimizing regret at this point.
Yeah.
So I have lived through every positive catalyst, every positive narrative, right? I've lived through DATS acquiring like 4% of the Ethereum supply, right? Just that completely new buyer source. I've lived through ARK Invest now buying Ethereum. I've lived through, like the international, not pension funds. What's it? But the basically the wealth funds, right? I've lived through them buying, Ethereum, however indirectly, whether it's an ETF or whether it's a DAT, right? It is so, the supply overhang on ETH must be in the tens of millions of ETH of people that are just willing to exit at low prices at this point. To suppress the amount of inflows that we've seen.
Yeah.
You look at all the large wallets accumulation that's happened. You look at within the next year, we should get large index funds like the Russell 1000 that are looking to include Ethereum DATs like Bitminer, right? So, it's not impossible for MicroStrategy to be in the S&P 500. It's not impossible for Bitmine to be in the S&P 500. Bitmine has more revenue because Ethereum makes revenue and Bitcoin doesn't, right? So these things are based on trading volume, liquidity depth, revenue, and market cap. And we would meet that as a requirement. So you start getting systemic buys of everyone holding an S&P 500 ETF or a tech stock ETF or Russell 1000 ETF. That just are buying Ethereum because they're supporting the NAV of these DAT companies, and it's in their rules they have to. What more do you need? Like, how many tens of millions of ETH need to overturn hands into new buyers before we can go up? Because it's obviously a lot more than I gave it credit for.
Yeah,
I thought by 10 million we'd be off the races, but we're well past that.
Yeah,
and we're down.
Yeah,
so it's weird.
Part of me is like, oh, careful what you wish for when the big boys come to play, because they don't want it at that price. They want it at this other price. And yeah, some of them bought there. And then I don't know how many like OG retail mom and pops are interested in selling now, but apparently some must be. So whatever.
I've just seen like on crypto Twitter and privately, I've seen a lot of Ethereum OGs. People have been holding since 2015, 2017, et cetera, at like, $10 ETH prices that are just saying, yeah, that's enough. And they're selling thousands and thousands and thousands of this. But as I said, if you look at net, histogram of the largest wallets, there's signs of accumulation, not distribution.
Well,
look at Ethereum exchange reserves. It's all straight down. Look at count of wallets with over like 10,000 ETH. It's basically up only. You look at new large buyers, holders. Look at the number of wallets that have acquired versus or sold all of the BMNR stock, right? It's like they've acquired hundreds of new wallets and like literally one went down.
I get all that. And I understand there's OGs that are selling. But why is it 15% in a day. And then it's another 15% in a day. That does not feel like OG simply selling.
Yeah, that's not OG selling. That's why we didn't go above 5,000, right? That's why we didn't rise up to the.
That makes more sense.
With the ratio where Bitcoin is, right?
They were like, if we could just get back to the previous.
Bitcoin got up to 100,000 and we just kind of like stayed around 4, right?
Yeah.
Why did we not go up when Bitcoin did that 50% rise? It's basically these
people
OGs capitulating. And then that capitulation lasted through like the April zone where people were just like, as we dropped to 1,500, they're like, well, I give up, right? They threw up their hands and said, well, I guess the L2 strategy didn't work, or they needed more value capture. All those narratives that seem to only apply to ETH, but don't apply to XRP for some reason, don't apply to Hedera or HBAR Bitcoin. It's these justifications why the price isn't going up. And they just they capitulated, and then into the DAT narrative going into 4K. A bunch of more hands said, well, I'm taking this second shot, I'm out, right? And so I know several people, including me on the second shot there, that's like, okay, I'm taking some off the table. I've seen enough.
I'm wondering how quickly the ship rights itself, because I don't see a multi-year bear market. I just don't.
I don't know. I mean, the 4-year cycle is a self-fulfilling prophecy, right? So you could see a 1 year, find the bottom in the next year, and then we could go up over the next 3 years. I just wasn't willing to round trip as much of my net worth as I had in ETH on, through another 4 years, just to kind of maybe break even in the next 4 years. Like right. I've got enough. I want to get to a point where I can start earning yield on other things and not be so over concentrated on ETH. And plenty of stablecoin yield out there. I mean, there's stablecoin yields in the 10 to 15%. So everything that I extract from ETH that was making 2 or 3 or 4% can now make 10%, 15% in DeFi pools. So, the revenue is going up and I'm not riding the wave down. Seems like it was worth doing.
There you go. All right. Thank you for the color there, Logri. We're going to move on. I got food in the oven. Crypto Wow Currency Deuter 129. The headline explains why flash loans will be unaffected by slot time changes. Technically speaking, flash loans do not have a duration. They're instantaneous and atomic. This is because the entire loan is originated and repaid within a single Ethereum transaction, which itself executed atomically. Another way to think about it is that the rest of the Ethereum network pauses for an instant while the flash loan is resolved, just like the network state pauses during the execution of any other type of standard transaction. Although there are plenty of tricks that clients can use to multi-thread things, the Ethereum virtual computer itself is single-threaded, so slot times can go up, down, or sideways, and flash loans are entirely unaffected. All right. Good to know. Here we go. Grow the Pie offers a weekly roundup of the Ethereum ecosystem stats and just leveled up their chain pages. Grow the Pie is a Deuter 66 for this week, a weekly summary, the Ethereum ecosystem insights from Grow the Pie from November 3rd through the 10th. Last week, the Ethereum ecosystem showcased robust scaling advancements with transactions per second reaching new records and layer 2 solutions driving efficiency. Below is a concise summary of key developments and metrics from our platform. All right, here we go. Transactions per second record, an all-time high of 24,192 per second. Primarily driven by Layer 2 Lighter with its ZK rollup architecture and state differentials, which minimize data posting to Ethereum blobs. Base chain transaction milestone. They hit a daily all-time high of 15.43 million transactions, reflecting strong user engagement and low fees, fostering organic activity. Layer 2 weekly active addresses declined approximately 68% from all-time highs to 5.37 million single-chain users, with 288,000 cross-layer 1 and layer 2 and 218,000 multi-layer 2 users. Ethereum mainnet held steady at 2.28 million, underscoring its reliability. All right, stablecoin adoption metrics. Base stablecoin supply surpassed 4.5 billion, highlighting growing liquidity and DeFi integration on the chain. Inc. stablecoin growth reached an all-time high of 134.9 million, up 14% in 24 hours and 127% in 30 days, signaling rapid adoption. Celo daily active addresses led all chains with over 709,000 daily active addresses and 1.4 million transactions. There's some other tokenization and community updates here. Looks like, spoiler, a big update coming on Grow the Pie. They'll go live on the site later tonight. Chain pages will be worth watching. So there's the big update. We've just leveled up our chain pages. Search by chain name, whether it's Ethereum or Layer 2, and your feature list, highlights for recent all-time highs and milestones, interactive apps map, real-time metrics, achievements, streaks, and all-time, and more. There it is. At growthepie.com, they got the new chain pages rolling out. You can see it right there. Excellent. If you guys are into data, they just have some of the prettiest web page work here. Check it out, growthepie.com. A Duder number, what did I say? 66 for this week, and a longtime supporter of our Ethereum's daily general discussion. I'm so glad that they stopped by with that information. User substantial hurry tracks more continued adoption. A Duder number 2 for the week. Zooming out, adoption continues. Policy advisor at the Bank of England here in the UK just shared this with me. Ooh. Shared this with you. You know this person. Maybe they should come on the podcast. Proposed regulatory regime for sterling-denominated systemic stablecoins. Sterling-denominated systemic stablecoins. Let's open up this link. USD stablecoins will remain the most liquid, but FX risk means lending and borrowing against GBP-denominated assets will be unlocked. Proposed regulatory regime for sterling-denominated systemic stablecoins. The link here. Do I read this and forward a little bit? The Bank of England's core mission is to promote, I wish I had an accent I could do, the good people of the UK by maintaining monetary and financial stability. Trust in money is a critical part of that mission and has never been more relevant than now, as innovation in money and payments accelerates, including through the growth of stablecoins. It is our job to ensure that the public can have the same trust in new forms of money as they do in existing ones. Is it your job? Is it your job, Bank of England? I don't know. All right, second paragraph. With that comes great opportunities. Who? For the people or for the Bank of England? Anyway, I'm trolling. We are designing a regime for stablecoins that is fit for the future. Our focus is on possible future use in real-world payments and settlements. Okay, not their current use to buy and sell crypto assets. Use of regulated stablecoins could lead to faster, cheaper retail wholesale payments with greater functionality both at home and across borders. We want to support such a role for stablecoins as part of a multi-money system alongside commercial bank money, including tokenized bank deposits, all underpinned by the continued role of central bank money at the heart of the financial system. Central bank money at the heart. Okay, it goes on from there. I'll let you read it. You can find that link at dailydoots.com. Awesome. Thank you so much, Substantial Hurry 25, Duder number 2, from your friend who's a policy advisor at the Bank of England. That's dope. All right. Insurance Guy question, Duder number 28, goes over the increasing regulatory clarity in the U.S. Here we go. Duder number 28. Looks like something insane just happened for staking in the U.S. Quote, Treasury and IRS release revenue procedure. Here we go. The new guidance clarifies how staking rewards are treated for crypto trusts and ETPs. Under this framework, staking rewards are no longer treated as immediate taxable income for trusts allowing crypto ETPs to stake assets and distribute rewards to investors without prior tax complications. I love this. Awesome. Key points. Here's the scope. It applies to staking within registered crypto ETPs. The impact enables funds to stake holdings and pass yields directly to investors under existing tax advantage structures. The market effect. It removes a major regulatory obstacle that previously limited staking adoption in U.S. investment products. This is under Secretary Scott Bessent's account. This is great. This essentially opens up the floodgates for all ETFs to soon stake their stash and become yield bearing. Note, this only affects institutional companies and not individuals like us. Awesome. Well, my accountant interprets it the same as I do, which is I'll sell it and I'll pay taxes when I sell it, not when I earn it. All right. Allegedly. Moving down the list, got 2 more left, everybody. 12 meatballs checking in from Buenos Aires. Hello again from Buenos Aires. I spent last week working furiously, and I'm almost done, hoping to release a version on Friday. Meanwhile, I'm looking at my calendar, and I might have overcommitted to it a little bit. On Friday, I'm going to the Polkadot event for the keynote, and then out for drinks at a security finance event that will probably involve me hiding in a corner and watching people. Polkadot? Really? Okay. I'm super excited about Governance Day. This is a sentence I never expected to come out of my mouth. And the Cypherpunk Congress. Then comes ETH Day, a full day celebration for the event. That night is Builders Night with fireside chats and panels, but they overlap, so I might have messed up. The following day is DPIN Day, that's DEPIN, which I signed up for because I keep seeing Logri talking about it. Now that the time comes to understanding decentralized physical infrastructure networks, DPIN, I'm wondering what I was thinking. That evening is a food event that looks super fun, but now has gone very corporate, and you have to be either a VIP to be allowed in for the first 2 hours. There's a different finance evening that evening that I might go to instead. I have a day of interviews and then the Pudgy Penguin Sala, which I have no idea about. Finally, the Ethereum privacy stack looks really interesting with some great speakers. Somewhere in there, I hope to get another ice cream with the payment solutions crowd. I feel breathless just writing that out. What's interesting is talking to other people, and it's almost like they are going to a totally different event. Literally zero overlap with my schedule and attending events that I haven't even heard of. There's so much going on here. I'll try to update each day. Also, I'm excited to say that the EV Mavericks have funded me to write 4 articles about that event. 3 deep dives and 1 interview. I have no idea how I will write an overview. These things will come out in the weeks following the event. And that is from one of our fellow EV Mavericks, 12 Meatballs, hailing from Buenos Aires.
Yep.
Nice.
Welcome to a conference. That is pretty much your stand, like ETH Denver, same way, ETH Dev, same way, Dev Connect, same way. Right? You have all these sort of specialist tracks because the blockchain chain can do so many things. So you just have to kind of like, where do you want to vibe at, right?
Yeah, and I'm gonna be super, what's the word, egotistical when I say it. I hope some people are like, I have to go to this event and then I have to go to that event and then I need to know where JT is doing barbecue. That's the ETH Denver thread right there. So if anybody's in ETH Denver and you're getting this message, reach out to me and I'll try to see if I can get you into whatever Airbnb I'm cooking at this year. Still looking for sponsors. I got one, but if you got any others out there that anybody interested in having me swing by and provide barbecue, I would love to do it. All right. Very good. Last one. Is this it? User ETH10K is FUD, shares Vitalik's et al.'s Trustless Manifesto. In case you missed it, the Trustless Manifesto is out. It's truly a great read. It's got its own smart contract where you can sign a pledge after reading. Some things are worth fighting for. All right, the Trustless Manifesto. It's pretty long. Let's just get to let's do why we build on Ethereum. We build on Ethereum because we choose verification over blind trust. We write code so that power cannot hide behind policy. We design protocols so that freedom does not depend on permission. Ethereum was not created to make finance efficient or apps convenient. It was created to set people free, to empower anyone, anywhere, to coordinate without permission and without trusting anyone they cannot hold accountable. Ethereum is the path to trustlessness. That promise must not be lost as we scale. This is what trustlessness demands. Trustlessness is expensive. It requires redundancy, openness, and complexity. It requires mempools that anyone can use, even if that invites spam. It requires clients that anyone can run, even if few will. It requires governance that moves slowly because no one can override consensus. Every shortcut that assumes trust eventually costs freedom. Trustlessness depends on free open source software, not only code that can be read, but code that can be freely run, verified, and improved. Trustless design must therefore obey 3 laws: no critical secrets, no indispensable intermediaries, and no unverifiable outcomes. Okay, the limits. Let's go. The duty of builders. We who design protocols are stewards, not gatekeepers. Our duty is not to build what is easiest, but what remains open and self-sovereign. When complexity tempts us to centralize, we must remember every line of convenience code can become a choke point. When critics ask why our designs are complicated, we should ask them what or whom they are trusting instead. If simplicity comes from trust, it is not simplicity, it is surrender. Trustlessness costs computation, latency, and mental effort. It buys resilience, longevity, neutrality, and freedom. Trustlessness also requires viable incentives. Systems must reward those who sustain them without turning them into gatekeepers. A protocol that relies on unpaid altruism will decay. A protocol that rewards control will centralize. The only stable equilibrium is one where neutrality is profitable. The way forward. Ethereum has scaled. Now it must stay honest. As we build new layers, new accounts, and new ways to interact, we must preserve the properties that made Ethereum matter. Users initiate their own actions. Anyone can verify and participate. No one can be silently excluded. Logic lives in code, not in contracts of trust. Inclusion depends on incentives, not on reputation or permission. Trustlessness is not perfection. It is a system that fails publicly, transparently, and recoverably, rather than privately and silently. Here's the pledge. We choose to build trustless systems even when it is harder. We pay the cost of openness over the convenience of control. We do not outsource neutrality to anyone who can be bribed, coerced, or shut down. We measure success not by transactions per second, but by trust reduced per transaction. We refuse to build on infrastructure we could not replace. We refuse to call a system, air quote, permissionless when only the privileged can participate. We refuse to trade autonomy for Polish or polite or freedom or frictionless UX. Trustlessness is not preserved by consensus alone. It is preserved by resistance. If your protocol requires faith in an intermediary, change it. If it relies on a private gateway, replace it. If it hides critical state or logic off-chain, expose it. In the end, the world does not need more efficient middlemen. It needs fewer reasons to trust them. Trustlessness is the foundation. Everything else is construction on top of it. The designs will change. The principles will not. Sign the Trustless Manifesto today. You can do it. I'm going to do it. I'm going to do it. I promise. I think I'll do it right now. Give me a second. I got to log in. Okay, sign the Trustless Manifesto pledge. Open up Zerabi. I'm going to connect. Here we go. Go for it. Signing on Ravi. My jtnickel.eth account. We're doing it live. You know what? I can just... There it is on the Lattice One. Not a sponsor. Best hardware wallet out there in my book. Done. All right. I think that's it. Well, thanks so much for sticking around today. Thanks again to Krono and giving us a overview of cartridge.gg. Let's open up that website one more time. Cartridge.gg. Jump in, develop, make stuff. The world needs you to build, and they need you to build on Ethereum and Starkware and any other layer 2. All right, that's it. Thanks for subbing, smashing the bells around here. Give us a like and stick around after the live stream. Also, if you guys want to have a guest on here, just reach out to me. You can find me on the old X at ProDJKC. I'm JT Nickel on Reddit. Anyway, that's all we got from today. Make sure to give us a follow at dailydoots.com. On behalf of the Ethereum Daily General Discussion and the EV Maverick Style, my name is JT. Cheers, big hugs from Kansas City.